Okay, perfect. Now we are live and we are public.
Yes, we are. We'll wait
That's
for a
great.
few
Thank you for
people
this.
to join in. Thank you so much for being here. I guess now we're back on track. Apologies for the technical difficulties we had a few minutes ago, but we're here with Maximilian Portenlanger, head of securitization at Bankhaus von der Heid, and he'll be talking today about investments in security tokens on an institutional investor level, with regulatory requirements and similarities compared to other structured securities. So I think, as Maximilian mentioned earlier, there's so much that we're going to cover today. So don't hesitate to ask your questions in the Q&A bar on the side, and we'll get to them at the end of the presentation. So Maximilian, the floor is all yours. I'll let you take it away.
Okay, perfect. Many thanks for the intro. And I think before jumping into the presentation, which I wanted to say in advance, um, we are a fully regulated bank here in Germany, and there are quite a lot of activities we are doing. I want to keep it definitely on the surface so that we don't lose anything here in between. And in case there are any questions and you want to go into deeper details, just feel free to post in the Q&A session. In this presentation from the structure, I will start with a short introduction into our bank, give you an overview of our services, what we are doing, and then we will focus on the financial structuring because we have quite a long history in financial structuring. And I will link the security token and the tokenized securities always to the classical securities so that you always know where we are also in the tokenized world and that the classical link already existed quite a long time before. So I will share the screen. Let me see. I think now you all see the presentation doesn't work. Seems to work. So let me know if it does not work. Okay, perfect. I see it here. The thumbs up. Okay, great. So we are Bankhaus von der Heid. Bankhaus von der Heid is a fully privately owned bank based in Munich. It was founded in 1754, and it's one of the oldest banks here in Europe. Now we have quite a long history behind us. And from this history, we are not only one of the oldest banks, but one of the most recent banks focusing on applying the blockchain technology. There are really few other players which are a fully regulated bank here in Germany, so we can definitely say we are amongst the leading German banks applying the blockchain technology. That's our von der Heid bank, our von der Heid group at a glance. Here you see the building, which I'm also currently sitting in. This is our Bankhaus von der Heid with over 250 years of tradition. And the focus of this bank shifted a lot in the most recent years. It was once private banking. Afterwards, we built up all the structured finance products in Luxembourg and in Munich, especially the securitization structures. And now, since 2019, we have a strong focus on digital banking and applying the blockchain technology in the structured finance products. Here is a short overview of our services. I will give you an overview and then I will tell you what we are focusing on today. From our services, we have the financial structuring, and that's exactly what I mentioned. Financial structuring means building structured finance products, and that was even the first time we were in touch with cryptocurrencies. It was in the year 2017 when we had a project which was about securitizing crypto assets, but I will come back to this later. That's our structured scheme. Then besides this, we have brokerage. And from brokerage, really, as you can see here, the trading of cryptocurrencies, we've built up a platform where you private investors, but also institutional investors have the access to a fully regulated environment with cryptocurrencies from a German licensed bank. That's also quite interesting, but unfortunately, we don't have so much time today that I can tell you about everything. This is why it's great. Same with custody. We also safeguard those digital currencies and digital assets for private investors, but also for institutional investors. and we are a fully licensed crypto custodian at the BaFin. And lastly, what we offer is also the on-chain payment solution with our URB stablecoin, which enables and now I switch into the world of classical securities, the delivery versus payment process, which you all know from Clearstream, also on-chain, so that it's possible to get a financial project and pay the digital currency, the digital euro, in the same time, so that the products are really switching at one second, at one instance of time, as it is required for a Clearstream settlement process. But today, because of the time, we will focus here exactly on the financial structuring, and as we introduced it already, what do we see now in the new world, and where is the link to the classical world? Let's keep it simple. Let's start with a traditional note issuance. That's a securitization transaction, and that's the structure of the classical securitization transaction, which is presented here. There is an underlying asset. There's a compartment according to the Luxembourg law of securitizations. We don't have to go into detail here. And there's an investor, and he wants to purchase a note. And this note has the underlying asset. And why do we make it? The reason why we make it is because we want to make the performance of this underlying asset fungible. Fungible means, take it here as the picture, and look for example, real estate. When you have a real estate, then this real estate is not fungible, meaning you cannot just take the real estate and transfer the real estate to any other participant. You need to go to the notary, but it's not a security which you can take and say, well, tomorrow it's yours, the day afterwards, two people own it because it's splitted, because it's a fungible security. No, it's not this. It's like more complicated to shift the ownership. That's why we securitize, for example, real estate, and then the performance of the real estate, not the real estate itself, is linked to notes. And this would be, for example, real estate linked notes, or when we take the mortgages, as you all know it, those would be the mortgage-backed notes. And now also let's make the shift to the tokenized securities. It's quite similar here. We have assets, maybe all kind of assets, and then we have asset-related claims which are presented. The reason why I've also chosen the icon as a note here is because the most common transactions which you might know are also in form of notes or participation rights, and those are presented via a security token, and quite similar to the securitization transaction, this is a fungible security token, and it's related to the performance of an asset. The difference here is that it can be transferred via blockchain and not via the classical clearing system. But the similarities are also quite clear. The asset tokenization also involves deep knowledge of financial structuring, quite similar to a securitization transaction. And that's also where we as a bank come in. We enable that the clients can make a fully regulated transaction of tokenized assets via the blockchain technology by us as a regulated entity. What we definitely also need to target, and that's also a case where I have the focus on. What is a security token? What are tokenized securities? And what's a securitization transaction and a securitized notes? We can discuss it as we did it from a technical point of view, and we can see the advantages from a technical point of view that you need less intermediaries with a quicker time to market and so on. But we should definitely target the prospectus topics and everything which is required there when you issue a security token or a tokenized securities. You definitely need to discuss who should be your target investors. And let's make it easy. Let's start with a securitization transaction. When you talk about a securitization transaction, there are several possibilities. One possibility is to keep it in a private placement for professional investors, according to the MiFID only. In those cases, you can make a quite quick transaction. You have the terms and conditions of issuance, but you don't need a full prospectus. Target investors are in this case the professional investors, but not the private investors. You can do this for a securitized note and also for a security token. But as soon as you want to target retail investors, and now I'm talking about really targeting a big amount of retail investors and not taking, for example, a VEB, which excludes you from the full prospectus requirement. But I'm really talking about a fully prospected security token, which is issued to the retail investors. There you have exactly the same prospectus requirements. You need a full prospectus, and you need to go to the authorities and you need to show them the prospectus, and they need to approve the prospectus so that you can target, for example, the German retail investors. The reason why it's also required here, because first of all, certain standards need to be set. And yes, of course, the retail investors, they are not so savvy, or you cannot expect that all retail investors are savvy with those securities. So it's also for protecting them. And that's exactly where we come to. We have now talked about how can we structure securities for institutional investors, how can we structure securities at all, and how can we target retail investors. But now let's focus on the institutional investors, as we just targeted the retail investors, and think about what are the requirements for the institutional investors. Well, the institutional investors mostly need a quite certain environment so that they can also transfer a big amount of money into those securities. And that's what I wrote down here. Mostly for tokenized securities, they need a regulated crypto custodian, and they definitely need a robust legal framework. I will come back to the robust legal framework shortly. But first of all, I go now again to the classical nodes. We are here in the classical node issuance in the current status. And then with a reference to Luxembourg, we have a robust legal framework. We have the law of securitization from the year of 2004. We have proven exchanges, for example, Xetra or Börse Frankfurt, where the securities can be traded. And we've also established players which could act as market makers, meaning they can bring liquidity into those products. And those securitization transactions have proven as a way for capital market financing in the most recent years. So investors know this, they know how to invest in those securitized products. Especially institutional investors now have gained quite a good experiences within the most recent years, how they can invest in the securitized notes and how they can handle it from a risk perspective when they need to book it in their required equity. This is the robust legal framework for securitized notes and other notes which already exist. Now let's look here to the digital securities. What do we have here? Well, we do not yet have the really active secondary market. There may be some places where you have a liquidity provider and some participants are trading against this liquidity provider, but you do not have this active secondary market yet. And this is definitely a case which is required, especially for institutional investors, but also increases the attractiveness for retail investors. If you have liquid price quotes, daily price quotes, and the possibility to trade your fungible asset every one time a day, or even 24/7, depends on the market makers and on the marketplace, how much liquidity the players are bringing in. And one thing which is also missing for the security token, or was missing up to now, was the real robust legal framework, which is comparable to the legal framework of securities here on the left side. But this is now yet to come. We are now talking about the EWPG here in Germany, the law on electronic securities, which will come into force shortly in July 2021. Well, and then when we have this, we have quite a lot of advantages which we can use for digital securities. First of all, we need less intermediaries, so we can have a quicker time to market. And with less intermediaries, it will also be possible to have lower transaction costs. And with this, it will also be quite likely that it's possible also for smaller players in the financial market to use the digital securities, for example, to refinance the business. Think of a business which has financing need for maybe 2 or 3 million euros. This business will not issue a note which is listed on an exchange. Definitely not. It might be possible, but it's also from a volume based, a bit small to refund it by a securitization transaction. But I could imagine when we have harmonized standards here for the security tokens, or sorry for this, not for the security tokens, in this case, the tokenized securities, which are really digital securities, and institutional investors as well as retail investors know how to invest in them. They have a regulated environment to invest in them as we provide it, and hopefully other players in the market will provide it shortly. And especially with the standards and less intermediaries, maybe it will be possible for those companies to refinance them with issuing digital securities, which are more efficient with less intermediaries, with a certain standard, and to find their case for capital market refinancing there. And I think there, especially in the new laws and in the outlook, there we have so many questions to discuss and so many topics we could discuss in detail. So I think it's now time to jump over to the Q&A session.
Great. Maximilian, thank you so much for that presentation. Very, very concise. We do have some questions, and one that I actually particularly like, being here based in Switzerland. It's on the regulatory side, of course, and it's come from John, the VP of Business Development of DigiShares. Do you notice any pros and cons with kind of using Germany as a jurisdiction for tokenization via other European jurisdictions such as Switzerland, Liechtenstein, Luxembourg, for example?
Oh, quite interesting question. Quite interesting question, because I'm also in touch with the Liechtenstein law of tokenization, and I know that this law was a bit quicker than the German law, and I'm also familiar with the Luxembourg law, where we have already existing not dematerialized securities, especially in the securitization transactions. That already works. But what I would say, I don't think that there is in the near future so much technical difference. I think the main difference will be which jurisdiction will set the standards, and how it's exactly the same as in other transactions, how it will be best to harmonize the standards. Definitely now we have some we have some dissimilarities. I know that in Liechtenstein it is possible to tokenize, let's call it equity linked tokens, but I think it will be the case that in Germany the standards for the European Union will be set, and those will be harmonized with Switzerland and Liechtenstein. But also in Luxembourg, the law on non-materialized securities was quite a good shot to make the securitization transaction more efficient. But that's just an opinion from my side, and I'm quite sure that here, as I'm sitting in Germany, in a German fully regulated bank, I'm quite a bit biased. That's my opinion.
But no, it's great to get that perspective as well, right? And we have another question here.
Yes. Prospectus filing.
Yeah. Do you file the prospectus in Luxembourg and passport to Germany? And do you work with a base prospectus for the SPV and issue the notes underneath?
Okay, so let's start with the prospectus. Well, both is possible. There is a CSSF in Luxembourg, And you can, so I'm quite sure the prospectus refers to the retail eligibility. You can either file for the retail eligibility at the CSSF, but it's also possible to make a Luxembourg securitization transaction and file for the retail eligibility directly to the BaFin. It all depends on the target audience or the target investors which you want to have there. When you want to have German retail investors, it's quite a good idea to file directly at the BaFin. And yes, the same question: do you work with a base prospectus for the SPV, or do we work with a prospectus for every issue? Again, it depends on when you want to issue a series, and the series is quite similar with just another underlying, then the base prospectus is definitely recommended. I myself have not yet done the base prospectus. The reason why is because the underlying assets and the reason why we securitized was always a bit different, and especially we were focusing on the securitization for institutional investors with a bit more complicated structures. But I think when you want to have securitization of assets which are quite similar and should be like from the same structure, then the base prospectus and filing the base prospectus for retail eligibility should be recommended.
Great, thank you. I think that was quite concise. Hopefully, Jürgen, that answers your questions there. The next one is quite interesting. Actually, coming from Alok Agrawal. I mean, if you see like much like Swift, right? What do you think of like the creation of like a unified cooperative to work together for some of these global protocols?
Definitely. I think there is no way around this. If you, I'm always comparing it to the clearing system, which set a standard for exchanging securities and made the first step in this direction. And I'm quite sure that we need to set a standard, and the standard should make the delivery versus payment process possible on chain. That's a technical point of view, but definitely also a legal point of view. That's also not to forget at Clearstream, when you issue the terms and conditions, for example, to Clearstream, they also check if they are according to the set standards. And if you want to avoid trash coming in your standardized network and making the good name of the network bad again, then you should definitely not only set technical standards, but also harmonize the standards from a legal point of view, what you need there, and what are your minimum requirements.
Perfect. Yeah, I couldn't agree more. We have Jonathan that's asking us if there is an issuance gap for retail.
Okay. I understand this, and I understand this question. Well, it depends on. The reason why I say it depends on how you structure it. First of all, no, there is no cap if you have the full prospectus. But in case you do not file for the full prospectus and opt for something like the WIB, the Wertpapierinformationsblatt here called in Germany, then, for example, you have a cap for 8 million, but there also exist other caps if you have even less prospectus requirements, for example, at the 1 million threshold. But usually I say, and that's an important point, you can do a retail issuance without full prospectus. Yes, that's possible, but let me come not from a regulatory, but from a legal point of view. The better you inform your investors, and the more information you give them and the more standardized you give them to them, it's not only better for the investors, but also if something goes wrong and you're issuing to the retail investors, you're also not running into the problem that the investors say, well, I had some sheets of information here, I could never know what's happening there. So that's why, and I know that here, excuse it again, I have a bias. I would definitely recommend the full perspective if you want to go big, but that's a bias from structured finance, definitely.
But it's true, right? I mean, full transparency is always best. And
it is, yes, and I don't want to say that the VEB is not transparent. It's just like I'm saying, it's difficult to get everything transparent in so few sheets of paper.
Yeah, no, it's very, very true. Dragon has an interesting question here as well. I mean, this may be one that you're probably going to say depends as well.
Oh, quite sure. I already see it. Yes, yes, yes.
But what's the overall cost for securitization? I mean, including kind of the prospectus, security, and all of these kind of included.
Okay, yeah, well, definitely it depends on question, but let's I think because that's an important case, let's start with the costs expressing as at least those costs are required for the several services. Well, when you look at the securitization transaction, and I want to have the full prospectus and also tokenized and also to the retail investors. Even in the simplest case, I think in the classical securitization case, what you hear from the legals as an indication, you have at least a 50K indication to make it retail eligible. I think when you have a tokenized, you have quite more issues to explain about your custodian, how is the money on ramp. That's, for example, cases we handle as a bank, but how is this handled? And you have explained this quite extensively in the prospectus. So I don't know where the 50K socket grows here. But as soon as I have a really indication of the market and I've done this project, I'm happy to let you know. The other one is the securitization transaction itself. Well, there we have a Luxembourg securitization law, which is quite lean, and it's a quite good law, which enables it to have quite cost-efficient securitization structures. It might even be possible from the structural point of view of only the securitization that you have running costs of below 50,000 euros when you have just a one-to-one back-to-back financing securitization transaction.
Great. Thank you for that.
Okay, the last question is quite interesting.
Yes, and so I think that will be one of our last questions of the afternoon. I think we could probably go on for.
But it's perfect. I think that's exactly a great end. What are we securitizing? Kind of fund hedge for something like this? Yes, we have securitized the blockchain for two in cooperation with Immutable Insights. For example, I think you will find it in my LinkedIn post. When you click at my profile and scroll down a bit, there you have it. That's a German registered REF, which is securitized, and this securitized note will be has the goal to be traded on exchanges. And I think that's exactly a case which is showing how handling digital assets, structured finance, and everything goes together. If you have just a registered REF as a limited partnership and all investors need to go to the notary to jump in and cannot trade their shares, it just does not make fun. And that's exactly where the securitization comes in. You securitize the limited partnership shares, and afterwards you have a fungible note linked to the performance of the underlying shares. And then at best, you manage it that the parties amongst each other are trading at regulated exchanges like the Frankfurt Stock Exchange. And then you have a securitized fund, a securitized hedge fund, like an IF, which is even fungible and tradable.
Okay, great. Thank you so much, Maximilian, for answering all these questions and the presentation. Before we wrap things up, do you have any final words for the audience listening today?
Oh, I think it was quite a great discussion, and many thanks for the moderation. Many thanks for the question. It was great. No questions left. Nothing to add.
Perfect, Maximilian. Thank you so much for joining once again, and to our audience. Now we're ready to move on to our panel 4, the last one of this afternoon. Very exciting one with all our speakers of the track 4. It's moderated by Professor Dr. Philip Sander. So thank you so much for joining. It really has been a pleasure to host this track. Don't hesitate to get in touch with me either if you want to get involved within the Crypto Valley Association and the ecosystem here in Switzerland. Happy to provide you with further context then and there. And before we finish off today, just wanted to give you a quick word from our sponsor. So Maite, I'll let you take it away. Thank you.
Good afternoon, I'm Yuta, CEO from Tech Fund. I'm honored to be a sponsor for this wonderful event. To introduce Tech Fund, let me pass the time over to Leo, who is the representative of our security token business.
Hi, good afternoon. Tech Fund's mission is to support startups to raise funds and accelerate their growth, leverage business expansion with online technology. We've done so for more than 600 companies over the course of 6 years. While working with these companies, we realized a lack of understanding about ST due to the immaturity of regulatory frameworks and the non-existence of secondary markets, although ST has a huge potential to transform the current finance system. With that, Tech Fund strives to bring ST fundraising into Japanese high-end real estate and startups. We need your support. Let's work together to reach newer heights.
Wonderful. Thank you so much for watching, and we'll see you all in the panel discussion in a few minutes. Take care.
Perfect.
Bye.